Like it's a complete Ponzi scheme when you realize that the money to repay these loans, it's not there. Just between two banks, you're talking over $1 trillion in loans extended to people. Canada's household debt to GDP has peaked just like the US household debt to GDP peaked in 2007. I'm going to show you. It's going to knock you around because you're going to really start to understand what's going on with this debt bubble right now. So as you can see right here, this is a chart of the United States debt to GDP, household debt to GDP in particular. And what you could see was that the household debt to GDP, it really sort of peaked around the end of 2007, the start of 2008. That was really when that household debt to GDP peaked, and then it started to go down. And then if we zoom in even more, so we changed the dates so that we're from 2006 to 2010, we can really begin to understand what happened even more. So you had 2009 started right here. You can see how it went down during 2008. After the third quarter, it dropped significantly because that's when the financial crisis happened. But you can see it peaked in the last quarter of 2007 and in the first quarter of 2008. Now, bear that in mind because I'm going to show you exactly what's happened in Canada, because this didn't happen in Canada in 2008, but it has happened in 2022, and it is a sign of what's to come, unfortunately, with this debt bubble, which just shows it is this debt bubble, essentially. People think this is just some sort of natural growth cycle, are just completely insane. So you can see basically Canada, there was no peak. There was no peak in 2008. And the other thing that is of note is around 2008, household debt to GDP was around 80%. If we go back to the US, household debt to GDP was at 100%. So it was pretty much 20% less in Canada than it was in the US. And this is pretty much why Canada didn't suffer the same bust that the US did in other countries, was because it wasn't as leveraged. But the problem is now it's just the complete opposite. It's even more leveraged than the US was during the global financial crisis. So again, bear that in mind. It was around 100 when it peaked out in the US. And now let's take a look at what's going on in Canada. So if we look at the past 10 years in Canada, you can see here on this chart how it's got up and it's right now just tanked from 2022. So it really peaked out there, and it may have even peaked actually in 2021, which it did. So it peaked out at 112 household debt to GDP. So, you know, that is kind of an insane number because it's like 12% higher than the US. And I know that doesn't sound like a lot, but it is a lot. When you're talking about these large amounts of debt, it peaked out higher than the US, but it's all around these same numbers. And I think that is an ominous sign of what's really to come. It's incredibly interesting to see the similarities of what's happened here. So it's just gone down since, and we're around the level, funnily enough, right now at 102 that the US was going into the global financial crisis. And then just to kind of show you, it's not just the US. If we look at Ireland and what happened in Ireland, well, that's an interesting one because Ireland did get up to around the same level. It actually got even higher than Canada did. And look at the bust. It was even larger. So what do you think that means? Can you expect an even larger bust? Because look at Ireland. Look what happened in Ireland with Ireland's asset bubbles. So I think that is kind of indicative of what you're going to see in Canada. When you've got more leverage in the system, it's going to take longer for that to bleed out. And I'm going to do a video that's upcoming on the banks. We're going to check all their recent earnings and see if there's any signs that they are starting to constrict lending, or it's the complete opposite, that they're still just going crazy lending out to these consumers that are getting more broke every single month. They're just getting worse and worse when it comes to their finances. And just to show you the amount of loans these big banks have in Canada, it's just unbelievable. So Bank of Montreal, for instance, just reported a few weeks ago, I believe. And if you look at the amount of loans they have, so right now they have $638 billion in loans. I mean, it's just an insane amount of debt that they have and of extended to consumers in the real economy. And this is just one bank. These Canadian banks are absolutely massive, and the debt bubble in Canada is colossal in comparison to other debt bubbles that we've seen in other countries like the US. It's just much bigger than it was in the US, which you would have thought after the GFC would be hard to reproduce. But here we are in Canada, and they've decided to do it. And you know, the interesting thing about the whole GFC, going back to that, was really if they just kept interest rates higher in Canada, that might have actually prevented the financial bubble from starting, because obviously they dropped interest rates down because of the global financial crisis to similar levels as the Federal Reserve and other places. But the fact is, the economy wasn't as battered by it in Canada as everywhere else because it wasn't as leveraged. So they could have actually kept rates a little bit higher, and they could have increased rates even further when they saw the housing market was starting to boom and it was starting to froth, but they didn't. And that was really the mistake. And it's been multiple governments, multiple Bank of Canada governors, and they just do not have a clue what they're doing. They don't have a good heartbeat on the economy. So it's really interesting. So let's take a look at TD now and see how many loans TD have. So loans, TD has $877 billion of loans. That is just a crazy amount, nearly $1 trillion in loans TD has. So, you know, just between two banks, you're talking over $1 trillion in loans extended to people. You know, there's way more outstanding debt in Canada than there is GDP, than even the money supply. It's just absolutely crazy. And, you know, a deleveraging event, it will happen. And, you know, the fact that the money supply and everything else is showing that, you know, we don't have as much money in the money supply as we do as loans have been extended by the banks kind of shows that you're in this bubble to begin with. Because the fact is, the currency units aren't even there to be spent to pay back these loans. Like, it's a complete Ponzi scheme when you realize that the money to repay these loans, it's not there. So it's just relying on the greater fool theory that the debt can just get passed down and the debt can just get bigger and bigger and bigger, because in these bubbles, the debt has to expand. It can't contract, it has to expand. Otherwise, the economy just implodes because of the debt bubble. So in these bubbles, it has to expand and expand and expand, and that just creates more and more problems with it. And the fact is, it can't expand forever. That is just ridiculous to even entertain that concept. Yet so many people do entertain that concept without even realizing it, because you're doing that if you're saying real estate prices can just go up forever, you know, they can just go up forever. If you think that, then that's the concept that you're entertaining. The fact that debt can just run away from income forever. Like, somehow people are just not going to be paying their debt, and the debt, they're just going to get extended more credit. I mean, sounds like a fantasy world, doesn't it? And it is. It's totally not going to happen. It'll be a deleveraging event like we've seen time and time again. History does not repeat, but it does rhyme. So anyway, if you've enjoyed this video, you might like that video there. You might also like that video there. I will see you in the next one. Take care of yourselves.